Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. And let's get on with a little education. What do you say? Market's down today, all of about 1%, depending on which one. Between 1 and 1.5% between the Dow, S&P, and the NASDAQ. But I want you to notice a few things. Now, remember, we had been talking about this yesterday, and I mentioned to you the more aggressive move, or the more aggressive long, was above 10,250, correct? Well, see how we got to 10,264 today? Guess what that was? It was not a run up at the beginning of the morning. It was a gap up. We gapped up above this 10,250 area. Those are trades I don't typically like to take at that point until I see a little bit more movement. If it pulls back and holds certain areas, then maybe I think about trades. In this case, we got a gap up and over 10,250, and then at the beginning of the day, drug it right back down again. They stayed below 10,250 where they just based, and then the worst thing that could happen to the markets happened. Bernanke spoke. And the markets tumbled. You can see us moving straight sideways here, holding the 50. And as soon as he opened his mouth and went, the markets just started to completely fall apart here. Well, I don't know if it was exactly that way, but it sure is fun to make fun of him that way, isn't it? Anyway, we saw a base, we saw a break of this blue line, and the heavy selling came in here. This was actually, go back and look at your charts, you can see the heavy volume that came pouring in here as the market started moving down. Now, what does this mean? Doom and gloom? Yeah, I don't know. Not really sure. I'm not really convinced quite yet, guys. I mean, look at this. We've had some big moves to the downside on heavy volume. Last Friday was a perfect example of that. And then Monday, Tuesday, we kind of grind our way back up. Here we have this big move here in the afternoon. Heavy selling, good volume. Do we grind our way back up again? I don't know. We'll see if the scenario plays itself out the same way twice. One's a fractal of the other, if you guys understand all that language. But what I'm still looking for are the same things I have been looking for. Breaks above 10,250 and breaks below 10,000. Now, if you know what you're doing from a day trading standpoint, you could have made money on this move to the downside today. Okay, but I don't walk my viewers. I will walk my subscribers through it, but I don't generally walk my viewers through every little nth detail of when to take a trade and when not to. My students all know, when to do this intraday. But from a bigger standpoint, I'm telling you, the 10,250 and the 10,000 area are still the areas you want to wait for to get those breaks on a more conservative manner. Now, above 10,250, still a little bit more aggressive entry. I like it more and more every day. Okay, as not quite as aggressive as it was a few days ago, but still a more aggressive. This above 10,400 is your safer one. But this is just some more consolidation here. We can count this nth wave thing if you want to. I don't care. I don't care about the wave count right now. I do not care. All I care about is, where am I going to trade? And my more conservative trades are above here and below here. Continue to watch that. Continue to watch those moves. Even in respect to the heavy volume we saw with this move down. I mean, it moved down heavily, for a while, and then it started kind of pulling its way back up again, and you can see overall it's sideways. Up here, base, drop. This high base looked like it was going to be a high base formation. Then Friday gave us that big drop to the downside. Now we've got a couple days back up, and now some indecision here. Wait for these breaks, guys. I'm telling you. You'll be rewarded if you just show some patience. Here the NASDAQ is. Look at its gap up. And where did it gap up to? Yeah, something about that 1860 mark. I might have mentioned that in my video, by the way, as overhead resistance. So this was a very nice opportunity to be looking for a trade. When it gapped up to just at or below this heavy overhead resistance, that was the time to start looking. Now, this did not last long, so you had to be very, very, very nimble to catch this trade. So I'm certainly not going to stand here and be disingenuous by saying, "Oh, I called it." No, it's tough. Sometimes these trades are very tough. All right, but they are possible. What we did see though is the big rundown to begin the day. Grind back up, and then Bernanke goes, and everything falls. So here we are back below these moving averages, but this NASDAQ has not broken this blue line. Not like we saw on the Dow. NASDAQ on a daily here, the bigger picture, chop, chop, chop. Here we have 1, 2, 3, 4, 5 days up, 1 day down, 1 day sideways, Another day sideways, another day down. This is all just sideways chop right here. Very, very difficult. Still waiting for breaks above this 1860, 1865-ish area, and or, I don't know, maybe back below 1800. It's a little bit more aggressive short, but still probably very playable down in that area. From a weekly standpoint, we're working on a Wednesday here, but holding below the blue line. For the week, anything can happen. We'll see. This thing could end up way down here by the end of the week. That ain't going to happen, but it could, right? It could. We'll wait and see where this candle actually closes to see if our overhead resistance is holding. SPX on a 60-minute here had that big drop here as well. Looking to get up and over, what was the area? I said, yeah, I would really prefer if you guys waited till it got up and over 1090, and we didn't make it. We had the gap up here to 1089, and it didn't make it. And you'll see why on the next chart. If you guys have that all drawn in, you know why. You know why it did what it did today. But here was the drop, little base sideways, and then, of course, the bigger drop in the afternoon, slicing through all of this, all of these moving averages here, like Bora. Now, we had been above it, and the bulls, man, that just should help them with support, you know, having this below it. But boy, when this bear market takes over, and we are still in a bear market, make no mistake about that, okay? We're still in bear market. Everybody wants to get out. Nobody holds. So tried a little rebound at the end of the day. Pretty anemic. Didn't get a whole lot done. Did not break the lower levels I'm watching for, though, which is 1060, 1050-ish, 1045-ish, and then beyond that. We won't talk about that quite yet. But I will tell you that those are still my levels to be watching to the downside, and you know where I'm at for the upside moves. From a daily standpoint, chop, chop, chop. You can see it working on the 50-day moving average. Man, the bulls had their chance right here. Right there. They got up above that 50-day for 2 days in a row. They were holding there. And could not break 1100. Just couldn't do it. The bears are... either the bulls aren't ready to go yet, or the bears aren't ready to give it up. However, we are still seeing a lot of indecision in here. Makes for very choppy action, and can make it very difficult for those of you that trade, especially if you like to swing trade. Now, I don't know if I've gone into this before, but day traders are people that are in and out in one day. Period. You're in the day, you're in the morning, and you're out by the afternoon. You don't hold overnight. Swing trading is for people that hold at least one night. Typically goes, 2 days, maybe 2 weeks, as long as 2 weeks. Those are swing traders, and that is a very, very. If you know what you're doing, man, I can't even stress how much more easy it is to manage those type trades, and it's set up so very well for those of you that have full-time jobs but are like, man, I'd love to trade full-time, or I'd like to trade more often, or I'd at least like to be profitable in my trading, but I just can't seem to put the puzzle pieces together there. And swing trading is the way to do it. If you can learn how to effectively swing trade, you can continue to keep your day job, whatever that might be, and make a little extra money on the side with the trading thing. But you have to understand what you're doing in the swing trading side to do that. So, fortunately for you, you watch videos at thestockminer.com, and gee, what a coincidence. That's what I do. I teach people how to do that. How cool is that? All right, there's my plug for the day. Moving on to the weekly, you can see here where you're still holding below this blue line. Like all the rest of them, this overhead resistance is holding. It's not just the blue line, but it's also the flowing blue line, which is the 50-week moving average. This holds for a few more days. Maybe the bears get their footing again here to the downside. It's anybody's call. We want to be watching these levels, and they all coincide with approximately 1100 up here, which we've been watching that. VIX confirming what we saw today. Big move down, big move up by the VIX, up